It's not every day a company tries to replace an entire category of enterprise software. GitLab says it can replace Jira, Jenkins, GitHub, and even security tools all in one place. But is that just a marketing spin? Or is there something real here for the long-term investors? In this video, we'll try and break down GitLab's business model, where it sits in the red hot DevOps space, and if this stock is a buy, hold, or run for the hills at current prices.
Welcome to Balance Sheet Investing.
Before we begin, a quick reminder. This video is for educational and entertainment purposes only. It's not financial advice. Always do your own research and talk to a professional advisor before investing. So what does GitLab actually do? GitLab is like a mission control for modern software development. Imagine you're a big company, say a bank, a telecom firm, and you have hundreds of developers writing code, testing it, fixing bugs, checking for security issues, and deploying apps across the world all at once. Now that's messy. It is slow and it's risky. GitLab brings all of these steps, be it coding, testing, security checks, and deployments, into one single platform. Most competitors like GitHub, Bitbucket, or Jenkins only handle one piece of that workflow. GitLab's Edge, it's an all-in-one solution. Plus, it's one of the first to bake in AI-powered features like auto-suggesting code, fixing errors, and even helping secure software before it ships. They call this GitLab Duo. Think of it like Copilot, but across the whole DevOps cycle. Now let's talk quickly about GitLab's business model. GitLab sells a freemium product, but monetizes via premium and ultimate tiers. That adds up fast when you've got teams of hundreds or thousands of developers. They ended fiscal 2025 with over 759 million in revenue, growing at 31% year over year. Their gross margins, a sweet 89%, and they've turned the corner on free cash flow and aiming for that 30 to 40% in the long term. Now, here's where it gets juicy. In Q1 FY 2026, revenues hit 214.5 million. Again, a 27% year over year growth with a free cash flow of 104.1 million. And that's a massive 49% free cash flow margin.
Let's do a quick valuation analysis for GitLab.
The valuation when it IPO'd was close to 35 times sales, which has come down to under 10 times sales. GitLab's current revenue is under 1 billion, but the DevOps total addressable market is estimated to hit about 50 billion plus by 2030.
Let's walk through the bear, base, and the bull cases for GitLab with some calculations.
Let's talk about the bear case where the competition wins and the platform stalls.
Let's say GitLab grows slower than expected and captures just about 5% of the DevOps market by 2030. That's about $2.15 billion in revenues in 2030. Now, considering that the competition is really high, let's assume GitLab has to make a lot of investments in order to remain competitive. Let's say it is able to generate about 20% free cash flow margins. That gives us about 430 million in free cash flow.
Assign a 25 times free cash flow multiples,
and you will get a valuation of about $10.75 billion. That's a modest gain from today's 7 billion market cap. Not a disaster, but definitely not the multi-bagger dream either. Now, looking at the base case, let's assume that GitLab executes well. It capitalizes on its all-in-one platform and takes about 7% market share, or roughly 3.01 billion in revenues. Now let's assume that it is able to generate about 30% free cash flow margins. Remember, in the latest quarter, they produced almost 45% free cash flow margins. Now, considering 30% free cash flow margins, they would be able to generate about $900 million in free cash flows in 2030. Again, considering a 25 times multiple, you're looking at a valuation of about $22.6 billion. That's over 3 times return from today's price. And that's a very solid outcome for long-term investors.
Let's talk about the bull case. Let's turn up that optimism just a bit.
GitLab nails its AI roadmap, wins major enterprise adoption, and grabs 10% market share, or about 4.3 billion in revenues in 2030. If it scales to 40% free cash flow margins, similar to Atlassian or Adobe, that's about $1.72 billion in free cash flow. Again, applying a 25 times multiple, we get a valuation of $43 billion. That's a 6x return from today's 7 billion. And if growth stays elevated beyond 2030, the upside could be even higher. So whether you're cautious bear or an optimistic bull, GitLab has a pretty compelling range of outcomes. In the bear case, you still preserve capital. In the bull case, it's a potential six-bagger. And remember, this all assumes a reasonable 25 times free cash flow multiples.
That's the GitLab opportunity in numbers. The question is, which version of the future do you believe in? Drop in your take in the comments. Is this a future compounder or just a niche platform? Now, let's take some time to talk about the risks. And let's be real, there are some big risks here. GitHub is owned by Microsoft, and Microsoft is a beast. Bitbucket's got Atlassian's backing. Azure DevOps is embedded with a ton of enterprise customers. If you look at GitLab's net retention rate, it is dropping slightly from about 145% down to 123%. Competition is fierce, and the platform consolidation cuts both ways. If customers see better value elsewhere, churn can become real. So is GitLab the next great software as a service compounder, or just another overhyped developer tool with a short shelf life? I'd love to hear your thoughts. Personally, I feel that GitLab is a market leader in the DevOps platform, and it does have the platform and the solution that enterprise customers want. So with that, I will have a starter position in GitLab. And if they continue to perform well, I'll scale it up to about 5% of my portfolio. If you like this video, if you found it useful, please do consider to hit the like button. Do check out my videos about the valuation for SentinelOne and how it can be the next multi-bagger. I'll put the link in the description below and also on the side here. I have also a few other videos around Palantir, Tesla, and other valuations, and I'll continue to churn out more videos every week. So do hit that subscribe button. Do you know that almost 80% of the viewers of my videos, they're not subscribed? And it would really help me and this channel a lot if you would consider subscribing, liking, and sharing my videos.
Until next time, stay data driven.